This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachurdiz. Thanks for joining us at xm.com. Rising pessimism about the prospect of a swift economic recovery from the pandemic dragged down equities on Thursday. The rout in global stock markets follows a sharp slide on Wall Street on Wednesday when the Nasdaq Composite plunged 3% and the S&P 500 lost 2.4%. Stocks have been on the back foot since early September and are on track for their first monthly drop since March. While concerns about overvaluation may have been an initial trigger for the slump, the diminishing likelihood of a near-term fiscal stimulus in the United States and tighter virus restrictions in Europe have severely dented the most optimistic forecasts for the recovery, sparking a major pullback in risk assets. The faltering recovery in Europe comes as the U.S. rebound is losing momentum in the absence of a fresh injection of government cash. Congress is reportedly preparing to go on recess until the November election. That pretty much rules out any chance of a virus relief bill being agreed upon before the election. Federal Reserve officials have been out in droves this week trying to expound on the central bank's new inflation targeting regime and the projections from the September FOMC meeting. Chairman Jerome Powell reiterated his plea to Congress for more fiscal support on his day 2 out of 3 of testimony before lawmakers on Wednesday. But in raising the urgency for more government support, the Fed may have contributed to the worsening mood by suggesting that the U.S. economy is headed for troubled waters. And without any new pledge for monetary stimulus by the Fed, markets will probably struggle to stage a comeback. It was a somewhat steadier picture in currency markets as the U.S. dollar eased up on its upward charge. The greenback held at 2-month highs versus a basket of currencies as the euro struggled after yesterday's worrying flash PMI figures. Virus and recovery worries have also battered the pound in recent sessions, though cable edged higher today on expectations the UK's finance minister will announce a new wage subsidy scheme to replace the current costly one, which expires at the end of October. But once again, it was the commodity currencies that lagged their FX peers as the deteriorating sentiment weighed heavily on the risk-sensitive Aussie, Kiwi, and Loonie. This was today's Daily Market Comment. Thanks for joining us at xm.com.